Hey, everybody. Great to connect with you all. We're going to go through it'll be a bit of an around the world in 80 days kind of whirlwind on a go-to-market strategy. So I'm going to whip through a bunch of slides, try and help you understand calculations of TAM, SAM, SOM, just everything to do with go-to-market. So there will be some level of overlap, as I'm sure you've already gathered from your time here today. There will be some level of overlap relative to other presentations, but I'm happy to take questions or support you in any way that I can at the end of this presentation or throughout the Startupfest week. So let's kind of get going. So let me just tell you briefly about what we do at Five and Vine. So we're specifically focused on challenger brands. These are brands that are trying to take on or take down the industry incumbent. The reason that is important as a framework is that mindset matters. You're not always allowed or able to employ the same tools with the same resources as the incumbent. Your thinking needs to be different, as I'm sure you all recognize, but oftentimes that thinking translates into how do I grow in a way that is better or different. It also requires you to size up your competition and figure out what their vulnerabilities are so that you can uniquely attack their vulnerability. So we work with some pretty amazing brands that range from everything from this one, which is we just launched a couple months ago at Coachella. It's called Jicama. It is a wellness brand. It's a cocktail mix that improves gut health because it's specifically made with the jicama root. Green Beaver, I'm sure you're familiar with. It's a natural products deodorant company. Greenlight, it's a debit card for kids that teaches kids about financial literacy. Borrowell, Drop, sort of more fintech players. Notion and Safe are smart home products. Quartermaster is a competitor to Jiffy and Setter. So those are the types of brands that we work with. It's really quite a range. So the reason that this is really well positioned for us and for me, and it'll be reflected in the insights that I shared, is that I used to run an incubator for Walmart in San Francisco, coming up with new revenue models that advanced sustainability and delivered economically. I ended up helped Walmart realize the value in re-commerce. So I built out a refurbishing infrastructure for all of Walmart US, took customer returns that were high value ones, refurbished, sold them online as refurbished product, but used it as a mechanism to win on opening price point versus Amazon, and then created a secondary flow where customers could bring back their used electronics. We'd give them market value in the form of cash or 1.1x in the form of a Walmart gift card. So I improved their purchasing power in the store, drove more throughput through the infrastructure, but was trying to really illustrate to the world that there's value in stuff that already exists. What's missing is the transparency about the degradation in value by day. And if you're able to pinpoint it, the world would start to see that I basically hold on to products and use them until they're reached a point of low utility, and then I put it back into the marketplace. So framed in another way, ownership is a fallacy. We lease everything. So there was that, and then I moved straight from there to Ecobee. When I joined, it was a really small organization, sub 10 million in sales, and they were completely focused on B2B. Employing some of these David and Goliath strategies, within 12 months, we took out Honeywell and became the #2 consumer brand in North America. And over the course of 3 years, 10x sales. So it was a really solid example, but it served as a sweet learning ground to say, how does Walmart think? And then what are ways to take on Ecobee's version of Walmart in order to win? So as I started out by saying, a challenger brand, it's defined not by its size, but really by its mentality and its desire to take down or to upend the status quo. So every year, thousands of these venture-backed startups ambitiously go to market, challenging entire categories. And these guys demonstrate how a small but dedicated team with a great idea can knock out even the fiercest competitor, the market leader. So what the challenger brands, they're quite fascinating because they really resonate with us on a human level. So not only is it your own beliefs in your product ideas, But there was a recent study done that said that we root for underdogs 88.1% of the time. So people really want you to succeed, and it's really tapping into that underdog mentality and conveying that to your end customer that helps form that bond. One of the other things that we do, and I'm just going to set this up to kind of serve as a bit of a provocation, we like to go to founders with some tough questions. And these aren't necessarily the toughest ones of the bunch, but they're illustrative of the kinds of questions that help design the right growth path. So the first one being, where are you now? Where do you want to go? And then it gets important. How do you want to get there? Right? I think one of the greatest things about being in the startup environment in Canada is that it's not about winning at all costs. We, because of our strong social ethos, think about how we want to win. But then this is where it gets interesting, is like, what happens when you get there? So you've won. You know, you've made you sort of have the profile that you want. Perhaps you have the economic outcome that you want. Now what? And thinking about that end state from the very beginning helps us design go-to-market strategies that deliver stuff that really matters to you. So, and then we also care deeply about the planet. We ask how the end state can be achieved in a way that is planet positive. And so you'll see, as I go through a bunch of case studies, a good amount of our portfolio are brands that really deliver not only profit, but for the planet. So let's kind of dig into the meat of this thing, which is a powerful go-to-market strategy. It really clarifies why you're launching your product, who it's for, and how are you going to get them to engage and buy it at a scale that delivers your revenue targets, your market share targets, and your profitability targets. So it serves as quite a clarifying doc, and as I get into the process of it, you'll see that it is really quite involved. But what's important to ground ourselves in is that a go-to-market strategy isn't just a one-size-fits-all document. It's going to be different for each one of you in the room. The key is that it should be customizable. So budgets may vary month to month or quarter to quarter, depending on what sales are like or what your influx of capital through venture is like. But being able to have a plan that is customizable, that can launch in 3 cities or 20 cities, is particularly helpful. It's also a great sign to your investor community that with more capital, more can be done. The second is that it can be perforated. So ideally, these are elements that are better together, right? That there's components of it. Not only is the message unified across channels, but the different components actually work together to create something that they couldn't independently. And the last is that it's scalable. That it really can be amplified with additional spend. And that's always it tends to be a bit more of a corporate nuance, but also plays out into startups. So in the corporate realm, if you have additional budget, you either use it or you lose it. And so there's those moments where, we have another $100,000 to spend, what are we going to do with it? In the startup realm, it really plays out if you're missing your numbers, right? If you have targets that you want to hit, obligations that you've made to your investor community, and you need to know, with more money, can I actually hit those goals? So ensuring that they're scalable becomes another really important component. So this is all the stuff that we're going to go through today. So we're going to start out by looking at how to define your value proposition, which is really the problem your customers are hiring your company to solve. The second being, how do you define the target market? So who, in fact, you're going after, who's your bullseye target, and then who are sort of secondary and tertiary targets? Brand positioning. And so there's obviously a connection between the value prop and the brand positioning, but the brand positioning is, how do you want the market to view your offering relative to the competition? And then there's product market fit. So how do you know that your need and your offering is being received well by the marketplace? We're going to dive into the competitive response, and this is really where the fun challenger brand stuff comes in. which is defining who your competitors are, both traditional and not, and anticipating what their likely response is going to be, both to your entry as well as to your success. Then we'll dive into channel strategy. So how and where will you distribute your products, and really the distinction between a marketing-led organization and a sales-led organization. And then we'll largely close off with the marketing strategy, which is now how do you go and sell this product profitably to your customers. So a ton of volume, but I hope what this does is provide you with a great overview. And as mentioned, if we don't get to everything, I'm around for a few days and happy to chat with you outside of this presentation. So let's start out with the value proposition. What I'm going to start off by talking about is this really great model developed by Clayton Christensen, an HBS prof. And the premise is jobs to be done, right? So he coined this phrase. The essence of it is that you're hiring, or consumers are hiring our products or our services to complete or to fulfill a particular job. Almost as if you were hiring someone for your team to do something very specific at your respective startup. So, and all of us have these jobs in our lives. Some of them are really little, like how do I pass the time while waiting in line? Things like Facebook are really helpful for that, maybe a couple of Instagram swipes. Some are really big, like how do I find a more fulfilling career? Some surface unpredictably, like the airline lost my luggage, now I need to find clothes for a meeting. And some are regular, like how do I pack a healthy lunch for my kids? So when we buy products and services, we essentially hire them to perform one of these jobs. And if we perform it particularly well, we'll get hired to do it the next time. If we fail, we get fired, and they move on to the next candidate. The candidates being your competition, both known and unknown. So I'm going to dive into a few examples of this because I think the jobs to be done framework is super helpful when you conceptualize your products. So Clayton Christensen engaged in a bunch of research, and there's a narrative or story about a Detroit area builder. Now, he was charged with selling condominiums. And these condos that he was selling, they were targeted at people that were downsizing. So call it retirees or sort of pre-retirees whose children had moved out of the house. And they thought they had everything nailed, right? They had triple waterproofed basements, they had squeakless floors, they had granite counters, stainless steel appliances, and the things just weren't selling. And he was trying to figure out, what am I missing? Was it location? Was it pricing? Was it our sales strategy? And so they tried to optimize each of these variables. Ultimately, what they concluded after talking to people was that people were trying to conceptualize, where do I put my dining room table? Now, the dining room table is an odd one, but you have to remember that these are downsizing families. And so when they're downsizing, there's still this glimmer of hope in the back of their head that my family will return to me on special occasions. And the dining room table symbolized this ability to host everyone. It also sort of brought back memories of kids spreading homework out on the table. It's where birthdays happened. It's where Thanksgiving happened. And so once they sort of figured this out, that they hadn't really structured their condos in a way that would help these downsizers figure out, where do I put my dining room table? And when they made that change, sales started to pick up. They realized that they weren't in the business of new home construction, but they were in the business of moving lives. And they were trying to figure out, what is that symbol, or that symbol of a life moved well? Another weird one that'll hopefully make a little bit more sense is, how do you satisfy your hunger on your commute? So they engaged with a project with McDonald's, and the objective was, how do we sell more milkshakes? So they did a bunch of research with people, and they asked, like, what if we made it chocolatier? What if we made it, thicker? What if it just came in a bigger container? all these things they tried to implement, none of them really pushed the needle on sales. So what they did was they spent 18 hours just standing by the cash at McDonald's from the moment it opened to the moment it closed. And they realized that 80% of the sales were before 8 a.m., which is bizarre for a milkshake. And when they talked to people, they realized that it was something that they used to occupy them during their commute. So the milkshake was really about this ability to cleanly consume some food over an hour-plus commute. And the alternatives were things like bagels, which people found too dry, and complicated when they had to hold the steering wheel with their knee and spread jam, or a donut that ended up making them feel guilty, and it had those little bits of coconut on their lap, or a banana, but it only lasted 3 minutes. And so the job for a milkshake was actually to sustain someone and keep them occupied cleanly during the commute. And once they figured that out and pushed milkshakes during the morning hour, sales went up considerably. So I'll tell you one more example, but I just want to pause there for a moment to say that it's a fascinating construct because often we're building really cool shit, but it's not always connected to the job or an articulation of the job that our consumer is trying to engage us for, right? Why are they hiring us to do something? Another odd one is a better peanut butter cup. So Reese's was trying to figure out how do they increase sales. And what they realized was that when someone purchased a package of Reese's, there was evidence of the consumption in the wrapper. So there would be this trail of Reese's, and you knew how many someone consumed. But the other challenge was that it was particularly laborious because it was, again, harder to do in every situation because it still does make some noise. And so the big innovation for them was to make these Reese's Minis, right? And it's something that you can just eat on the go. It didn't have a trail, so it was basically covert consumption, if you will. But another sort of fascinating example of when they figured out what was the limitation, they were able to solve for a way to overcome it. So this jobs to be done framework is really helpful for us, not only in developing value props, but also in developing products. Asking this question, if your product is so good that your customer would fire their current product to hire yours, conceptualizing a product construction that allows for you to say that defensively is pretty awesome. So I think reflecting on the product you fired before hiring, or the product your customers fired before they hired your product, it's just a great way to ground yourself in the foundations of a go-to-market strategy. Some other little examples that may help is Netflix doing the job of Blockbuster, or Uber and Lyft, replacing taxis and getting from A to B. But the job to be done is basically quite similar. So thinking about what you actually do for the consumer is really what this is all about. And so there's another model that should help with this. And it's thinking about how does your product fill these needs. Everything from, it's very like Maslow, but the basic needs, the psychological needs, and the self-fulfillment needs. So thinking through that, because it's not always that the technical solutions are purely functional. There used to be this statement back in the day that you don't get fired for hiring IBM. And so there's a lot of psychological value in helping people address a level of insecurity about, let's say, their accounting system, their database, whatever it happens to be. So really thinking about how the job to be done that you come up with addresses these needs should be quite helpful. So that helps us out as a foundation, figure out how to develop a value proposition. Now, a value prop for your customers should do three things. One, tell them the problem that you're solving or the job to be done. Quantifiably illustrate the value you deliver and explain why they should choose you over the alternatives. So I'll just walk through a few examples. So one being Trello. And this, I think they've done a phenomenal job in their articulation of Trello as the free, flexible, and visual way to organize anything with anyone. So it really follows that pattern, just to go back for a moment, of sort of saying, how do you solve the problem? What value are you delivering? And then why should you choose Trello or whatever the brand is over the alternatives? Another great value prop is Unbounce. Build and publish A/B testing landing pages without IT. Like a single sentence that really wraps your head around, what do these guys do? And getting to a value prop like that for all of us is really that desired end state where anyone can read it and fully understand the value associated with that product or service. One of my portfolio companies is Greenlight. As I mentioned, it's a smart debit card for kids. And so their value prop is helping parents raise financially smart kids. So what they do is use the debit card as a mechanism to engage in conversations about money management in an era where cash isn't nearly as ubiquitous as it once was. There's Majuri. I'm not sure if you guys are familiar with this pretty amazing jewelry brand that's Canadian. So for them, it's fine jewelry that's for your everyday. Jiffy, home maintenance without the hassle. Squarespace, the all-in-one platform to build a beautiful online presence. For most of these, they're really quite clear and compelling value propositions. In the case of Swift, which is a training app for cyclists, serious training made fun. Waze Carpool, save time and money by riding together. Evernote, your notes organized, effortless. Only a couple more, I promise. Fair, get a car on your phone. Postmates, anything, anytime, anywhere, Postmate it. So hopefully that just that rudimentary understanding is helpful, which is, and the summary being, the jobs to be done framework is super important. Thinking about what people are hiring your product or service to do, and then what product they're firing in order to welcome you in becomes quite helpful, and it serves as kind of a cornerstone to develop a value prop. With that value prop, you want a single sentence that really helps people understand the value that you deliver, ideally quantifiably, and why it's better than the alternatives. So now let's shift over to the target customer. Now, the target customer is helpful for two reasons. The first of which is it obviously helps you design your product so that if you have these target personas that you're going after, as you're doing product testing to test it with those individuals and ensure that it really delivers everything they want and more. But the second thing, on a purely economic basis, is it helps you focus in your marketing budget. So you only have so much money that can go around, but if it's targeted at that desired group, you have a higher probability of building traction and being successful. And you're looking for that 20% of the market that will make up 80% of the revenue. So the question is, how the heck do you figure this out? So you probably have a hypothesis in your head as a starting point, knowing that this was the group that I was designing my product for. Now, what I'm going to talk to you about is how do you go through a process of validation. So one way to do it is to use Alexa. So it's not the voice assistant, it's another Amazon company though. And what they help you do is identify the audience overlap with your competitors. So really interesting to use Alexa. It's for the most part, there's a lot of free stuff that's available to it. I believe they even have like a 2-week trial, which is more than sufficient for you to get the basic information that you need. But to see, once you've identified your organization and your target, who your key competitors are, you can then line up your hypothetical target relative to theirs and see the extent to which it's aligned. So it's a really helpful tool. The other one that you can use is Moat. So what Moat does is when you type in a competitor's name into the search box, it feeds you all of their display ads. Now, when you see them, you can kind of glean a lot of information just by looking at their ads. What's their message? is it targeting the same group that we are, or is it targeting someone else? Is the language that they're using really accessible, or is it highbrow? Are the colors that they're using skewing a bit more perhaps feminine than masculine, or is it skewing, older and sort of floral for an older demographic, or is it skewing more like youthful and hip? All of these things help you really diagnose whether the target that you've picked is in fact the one that you want. The other thing that we do is we review the social feeds. So you can gauge a lot by looking at, is it male, female? What age of people are responding or engaging? Who's following? Who has and in particular, look at the bloggers and the influencers that they're engaging with. Because if your competitors are picking particular bloggers and influencers to work with, then you can access the audience demographics for those influencers and really figure out, am I going after the exact same target that they are, or do I want to zig when they zag? Another thing that you can do is sign up for their emails to learn how they engage, right? So I'm sure they'll have the rudimentary versions of Dear, fill in your name, and their offers, but getting that level of competitive intelligence over time not only helps you figure out who they're targeting, but how they view that relationship and how they intend on evolving it. You can also learn about current customers via Shopify or Google Analytics, really just digging in and looking at those profiles. And there's another site that we use called Clarifies that can help you determine your audience demographics. So there's a lot of resources that are available that help you dimensionalize that target customer beyond just the basic description that you might outline of men 25 to 45 that have this income. SEMrush or SEMrush also is really helpful in figuring out target psychographics, and a lot of that comes from, it's not that it explicitly says it, but it's providing you with the information that allows you to decode it. You can also look at the backlinks of competitor brands through SEMrush, and that ends up being quite revealing. Not only can you learn about their psychographics, but you can also gauge their marketing strategy to some extent because you can figure out what their affiliates are like. And then that helps you make the determination about, are those affiliates I want to go in competition with, or how do I find my own version of them? And then there's Facebook and Instagram, not only to find real people that represent your target, but their audience profiles really help you dimensionalize that even further. Now, the great thing about all of these is that they help you refine your hypothesis. And then what you want to do is actually talk to people in real life, right? You want to find those people, whether it's through your social networks or even through Facebook, potentially putting ads on there, looking to speak to people that fit this profile about a new product or service that we're launching. All of that is helpful, and those in-person conversations, one, help you validate this refined hypothesis that you've come up with, but secondly, they help you fill in any gaps. So in terms of that target customer, the other thing is you probably launched some version of MVP if you're not already well further along in your journey. But engaging that core group of customers that are real advocates or power users for your program helps you gauge feedback in a really thoughtful way. And I'm sure you figured this out, but going back to that 88.1% of people that want to root for the underdog, these guys, they're invested in you, and they want to actually help build something great as much as you do. So engaging those core users for feedback is really helpful. It also suggests once you have that hypothesis or that refined hypothesis, building personal relationships with your customers. So for them to get an email from you ends up being a pretty big deal. It serves as not only a great way to establish that dialogue, solidify the relationship, but there's great opportunities down the road, having them be beta testers, getting additional feedback, learning about bugs, etc. So this challenger brand, Italic, launched, and they had a huge wait list But what they ended up doing was receiving all the people that were on the wait list and had sort of gotten through, received an email from Jeremy, their CEO, and he wanted to engage in that personal dialogue with them. And it ended up being so powerful that in addition to their core press strategy, just hearing from the consumer or that level of CEO engagement with the consumer ended up bolstering their press strategy. So just a quick recap on target customer. So just, you're going to have a strong hypothesis going in, which allowed you to build your product or service. And the question, I think, in many of our minds, even though as we're racing to make this startup as successful as it possibly can be, is did I pick the right one? Do I really intimately understand this group, or do I just have an MVP understanding of this group? And to what extent will that hold me back? And so what I was trying to convey was there's so many free resources that are available. Use them. Secondly, do the competitive intelligence. Understand what your competitors are doing. Look at their ads, sign up for their email, look at their backlinks. You will understand a ton. And third is that your customers have a vested interest in your success, not always at a 10 out of 10 level, but engage them. Develop that relationship, and sort of like insurance, by investing in it a little bit every day or every week, it will be there when you need it. So now we're going to continue our whirlwind journey and move on to brand positioning, which is really how you want the market to view your offering relative to the competition. So you've probably seen this. It's relatively common. It's sort of the Mad Libs version of positioning. I think it's still helpful. I know that there's a variety of feelings about this, but it's still helpful as a baseline for positioning. Here's an example of how it plays out in reality. This was Amazon's positioning statement back in 2001. For internet users who enjoy books, Amazon is a retail bookseller that provides instant access to 1.1 million books. Unlike traditional booksellers, Amazon provides a combination of extraordinary convenience, low prices, and comprehensive selection. A helpful starting point, but not necessarily the be-all and end-all. Now, there are alternative models. And this was from the Made to Stick book by Dan and Chip Heath. And they figured out that it was analogous to movie pitches, right? Where Jaws on a spaceship was how Alien was pitched, or Die Hard on a bus was how Speed was pitched. And so the premise being there's a proven industry example for this new domain. And so you can consider it like Tinder for friends or the Uber of grocery. These are also helpful positioning statements. But I think that the point, regardless of which formula you follow, is having something is helpful. Being thoughtful about it is helpful. But actually trying out multiple approaches and seeing whether it triangulates to get you to a solid place, that is really the key. And then you're going to probably try it out. Just like you would a sales pitch, right? You're going to try it out with others, and when people start to go, I get it, this makes sense. Like, I understand not only what you're saying, but I understand the importance of what you're saying, that this is a really big opportunity. You're in a pretty solid spot. Now, product market fit. This is going to start to get a teeny bit dense, so just bear with me. But this was coined by Mark Andreessen, where he said, it means being in a good market with a product that can satisfy that market, just very simplistically put. But the way that most VCs assess product market fit, at least at the start, is by looking at TAM, SAM, and SOM, right? So total available market, serviceable available market, and serviceable obtainable market. Now, TAM tends to be the total market demand for a product or service on a meta level, whether it's global or continental. SAM is the segment of the TAM that's targeted by your products and services within your geographical reach. And then SOM is the portion of SAM that you can capture. So if you were a fast food chain, your TAM would potentially be the global market for all fast food. But if you weren't, and if you were present in every country and had no competition, TAM would be like the equivalent of your total revenue potential. But that's obviously not going to happen. And so the serviceable addressable market is the demand for your type of products within the markets that you're operating in. And then what you would do is bust it down into a SOM, which is, okay, if I'm launching a restaurant in 2 cities and there's a bunch of other competition, what is the likely share that I can get in those 2 regions? And that represents SOM. So I'm going to walk you through a little bit, walk you through this in a lot more depth, because it's one of the areas where at least our clients get tripped up the most. So I'm hoping that this ends up being quite helpful to you. So let's start out with TAM. So there's 4 methods of calculating TAM, but the formula in essence is average revenue times number of customers for the entire segment of the target market. So the 4 methods being the top-down approach, the bottom-up approach, the value theory, and then references to external research. So on the top-down approach, it tends to be more macroeconomic in nature, where you're using sites like StatsCan or World Bank or CIA World, and you're identifying a subset of customers for a particular product or service. And so you're working your way down from this really macro level and then finding ways to eliminate attributes that don't matter to you. So attributes either geographically or by customer type. And I'll walk you through a very concrete example after I go through this overview. The bottom-up approach is by figuring out your market size, let's say within a city, a state, a province, and then extrapolating up, right? And saying, okay, well, if the market in Montreal is X, and I know that Montreal's population relative to the Canadian population is Y, I will just take my market size in Montreal multiplied by all of Canada or all of French-speaking major cities or whatever the relevant sort of extrapolation up is. But it's basically starting small and extrapolating up. Then there's the value theory, which is useful for a completely new concept that'll provide positive trade-offs versus an incumbent. And so what you'll end up doing is estimating the value add that this new product or service will bring to people's lives, and then using that to extrapolate out to a theoretical revenue opportunity. This one tends to be just way tougher and probably open to far more scrutiny from VCs, but it's an approach nonetheless. And then the easy way, if it's available, is to leverage a site like Statista, or there's Gartner. There's a number of other organizations that do market sizing. And if they've already done the work and they have the credibility associated with them, being able to leverage one of their stats in your presentation just becomes a wonderful cheat. The downside to it is that if you haven't gone through the work yourself, it's harder to have defensible numbers because you don't always know how they're constructed, but nevertheless, it can get you where you want to go. So we're going to look at a very practical example with WeWork, and hopefully it'll be really clear. So this example is from a guy named Alex Graham. I don't have the URL in a particularly great and visible way, but his website is toptal.com, and he constructed this WeWork example. So he defined his geographic universe as the 35 members of the OECD and 5 other countries where WeWork currently has operations. And he used a combination of OECD data, and UN data, and worked out the percentage of the labor force in services. And so this was then trimmed down to those that are working desk jobs. And then he used the United States Bureau of Labor Statistics data for the ratio of relevant desk jobs to the entire service sector. Then he used a bit more OECD data, and he stratified the workforce by size of company. And so he said that employees that work for smaller entrepreneurial companies, they're likely the ones that are going to be using a WeWork, and the more established companies wouldn't. So he was able to sort of pick that relevant subset and apply it to his data set. Then what he did was he took the quoted prices from a random WeWork office in 22 cities, and he figured out that the price of a hot desk was $378, and the price for a private office was $610. And so this was on average. So then he used this thing called the Prices and Purchasing Power Parities Index to figure out how that applied to other nations. So this is what helped him figure out that a TAM for WeWork was 1.35 trillion. So that's total addressable market. Now, narrowing down the TAM further, he said these are folks that are creative class, and they have post-secondary education, and they live in urban entrepreneurial centers, and they're companies with less than 250 people. So again, it's almost like you're whittling down this gigantic number into something a lot more manageable. So the TAM then helped us, the TAM ended up translating to a SAM of 168.4 billion because he was able to sort of take this giant number and work it down. But to narrow the focus down to a SOM, he looked at 23 countries that he could eliminate where the customer base had less than 1 million people, right? Because it just wouldn't be economically feasible, at least at a relatively early stage for WeWork to get into smaller markets. He then looked at the competitive environment for WeWork, so things like Regus, Impact Hub, rival co-working spaces. He looked at things like private office rentals, coffee shops, working from home, took it down even further. And then ultimately assumed that the SOM would be 33.8 billion. And so when you look at these ratios, you can see that it's really like it gets down pretty significantly into a serviceable, obtainable market. Now, I mentioned this, it's obviously a lot of data. I don't want to sort of burden you with it, but just the premise being, how do you take this gigantic market and work it into something that's realistic? Secondly, that a bunch of these stats are available through sites like StatsCan, UN, OECD nations. The third point is that the logic, like keeping track of your logic on what you're going to keep in and rule out, is going to be a great reference point, so that when you get in front of VCs and they're asking about how you came up with the calculations, all of your assumptions are there. And also, in case you made a mistake, at least you can go back and easily fix it. And then the final point is that looking at instances like this, where you've really stripped away a ton of the market, is a pretty good indicator of credibility. Because it says that you're not overestimating what the potential is, and that you have a pretty good grasp on reality. Now, there's a gut check that you can do for something like this, which is, and it comes through the form of a survey. If you survey your customer base, and at least 40% of them indicate that they would be very disappointed if you no longer existed, that ends up being a pretty solid point to say that there's product market fit. So just a reasonable reference here. Now, going back to another Andreessen quote, he says that you can always feel when product market fit isn't happening because customers aren't quite getting value out of the product, word of mouth isn't spreading, usage isn't growing, press reviews are kind of blah, the sales cycle takes too long, and lots of deals never close. So what your investors are likely looking for is that level of, one, that you have a grasp on reality when it comes to TAM, SAM, SOM. Secondly, that there's this sense of product market fit, and which perhaps comes from that 40% survey data. And the third is that your customer reviews are strong, that word of mouth is actually driving your flywheel, that usage is growing, press reviews are quite positive. You basically have all the indicators that suggest things are going your way. So now we're going to shift over into the competitive response. So what we typically do, this is an example that I did for an Airbnb competitor that we're working with, but what we typically do is start out by mapping out who are the primary competitors, and then looking at a variety of aspects of their business. But this is really just to get our heads in the game of who are they, where are they advantaged and disadvantaged relative to our offering. And what this helps us do is anticipate whether someone's going to react at all and what their reaction is likely to be. So some great questions to ask yourself are, one, will your competition react at all? Will your rivals see your actions, or is it so discreet, or are they so sort of in their own head that they're unlikely to see it? Will your competitor feel threatened? Now, anytime someone feels threatened, they are more likely to go on the attack. And so the question is, to what extent this is a shot across the bow, or it's just something that is that perhaps they're not worried about, like a little dog nipping at the heels of a big dog. Will mounting a response be a priority for them or not? And then can they overcome the organizational inertia to actually respond? Secondly, what options will they actively consider? And then finally, what option are they most likely to choose? Thinking about this from the beginning, because I find it super fun, because there's ways to play a game of chess with the competition and ultimately end up winning. So I'll illustrate through a quick story. So as I mentioned at the outset, I used to be the CMO of Ecobee, which is a Canadian smart thermostat company. Now, Nest really came in and did the heavy lifting of establishing the market as being a consumer-friendly market. Prior to Nest, all thermostats were sold through contractors, or at least the vast majority of them were. Now, our shared target, we happen to have two targets. We wanted to take down Nest, and we wanted to take down Honeywell. But Honeywell had a hilarious response. So when Nest came out, this was their response. Right? And this was 18 months after Nest emerged, they came out with this. I don't even have the words for it. It's such a lame attempt at a competitive product from an organization with resources that are orders of magnitude larger than what Nest had. But this gave us clues as to what they were likely to do. And so knowing that from the beginning, we were able to go after them and displace them just within 12 months and became the number 2 thermostat, because we knew that they're likely to interpret the competition at its most rudimentary level, which is people want a circular digital thermostat. Not that people want great UI or mobile control or a learning functionality, just a circular digital thermostat. And so when Ecobee, what we did to compete with Nest is we identified that they had a superficial level of design. There was design at an industrial level. But the consumer need that wasn't being met was that people wanted to be comfortable in the rooms that they were actually living in. Now, a thermostat, its job is to deliver comfort throughout the home, and yet it only measures temperature in one location only. So your thermostat is optimized for the hallway. It's not optimized for the bedroom or the family room. And so we address that through a design, like a real design solution, which is through a room sensor. And that's how we ended up winning. And as predicted, this was Honeywell's response 5 years later, which was this ridiculous thing that goes on the wall, right? And so it was great for us to figure out, and we happen to have a kind of not particularly agile competitor, but it really helped us anticipate what the competitive response is and figure out how to go head to head and really take them down. So I want to jump into channel strategy. So what this framework is intending on illustrating is that there's an interplay between sales and marketing in a go-to-market strategy. When a product has been commercialized and is available to the public, it requires both marketing and sales to function. So that's when it's running at a good clip. But in the early days, you kind of have to figure out whether it's a product that requires more selling, like it's a high-value product where the need isn't fully understood, and so it requires a human to go and talk to a select group of clients that are making a big purchase, in which case it tends to be more of a sales-driven strategy. Or if sales isn't driving the go-to-market strategy, marketing must, and that tends to be more on the lower cost, consumer accessible product. So I'll illustrate this through a quick example. So imagine, and these are 7 attributes that are worthy of helping you figure out whether you want to have a sales-heavy go-to-market strategy or a marketing-heavy go-to-market strategy. And it's thinking about where your product fits along this continuum. So this example illustrates Crest by Procter & Gamble versus a jet engine by General Electric, right? So Crest is obviously really cheap, a jet engine expensive. The market size is dramatically different, as is the complexity, the fit for a group of people, the customer type, be it B2C or B2B, the relationship, whether it's a single transaction or it lasts for a long time, whether it's high touch or low touch. But figuring out, using this continuum and plotting out your product along these 7 dimensions will help you really clarify, should you lead with sales or lead with marketing? Once you've made that determination, the next step is to identify the right channels. So considering your audience, how do they typically access a product like yours? So some of the questions to ask yourselves are, can you sell a product directly? Can you go D2C, where you're going selling directly from your site, whether it be a Warby Parker or a Harry's Shave model? Even Ecobee, when we first launched, we were not in retail. It was purely direct to consumer. But then as you evolve, potentially there's a selling through retailers or whatever the equivalent is in your industry, or is it selling through wholesalers? And the margin or the economics of the product vary through each of these, but it really helps you figure out, how am I going to sell this thing? And then do you sell in one channel or do you sell in multiple channels? And then related is, can you experiment before committing, whether it's through the like a traditional pop-up for more of a consumer product, or an equivalent whether you're setting up at a conference like Startupfest and kind of getting people or selling the product here to potential startups. But there's something really powerful about experimenting before committing, because as you figured out, whether it's through MVPs or otherwise, this is essentially the retail MVP. It helps you work out a lot of kinks. And then just about finally, the marketing strategy. So I'm sure you're all familiar with this marketing funnel. It's extraordinarily common, but it differs from obviously B2C to B2B. But the point is that you need to think through your engagement level at each of these stages, from making someone aware of your product, gauging their interest or at least piquing their interest, ensuring that your product is part of their consideration set relative to other products that they might hire, gauging their intent as to whether they want to transact or not, helping them with the evaluation as they do that level of comparison, and then ultimately leading into a formal purchase. Now, that's complemented by what is considered the digital marketing trifecta, which is earned media, paid media, and owned media. So owned media are things like your own properties, your website, your social channels, email. Earned media is press, and then paid media. And all of these have a lovely interplay in working people down that funnel. So even with things like paid media, leveraging it to amplify your press can be extraordinarily helpful, or leveraging it to amplify an influencer review or a press review, that kind of thing. So once you've somewhat developed a high-level marketing strategy that helps both your team and the venture community understand how you're going to work people through the funnel, you have to draw the conclusion of, am I going to have a hard launch or a soft launch? Soft launch, similar to the MVP that we've talked about, it's far more palatable. It allows for easy and early testing of your product and concept. It allows you to iterate a lot more quickly. And it's cost effective because you can go after a narrow group of people. You don't have to think about national or North America-wide campaigns. A hard launch, by contrast, is that your product is sort of having a coming out party into the world and saying, we are here, come scrutinize us. And as a result, it requires the product to be a lot more feature rich, a lot more developed, but it also tends to require a heftier budget because now you're dealing with it on a mass scale. Now, with some things like soft launches, there's a variety of different ways that you can do it. One of them is releasing your product to customers who are pushing your product to the limits. So, as an example, an athletic company releases a running shoe to a handful of professional runners to generate publicity, but also really put the product to the test. You can launch with a customer pilot. So Asana offering a free trial of new features to existing customers before doing a broad launch to new customers or to the press. You can do a soft launch with a location pilot, so just geographically limiting that soft launch. You can do it through digital channels only, and allowing you to A/B test things. You can do it with an MVP. So a curious example of this is a stock trading app that might not go directly into trading functionality, but might allow people to monitor stock prices and then eventually lead them into the transactions. So this might help you figure out whether like the pros and cons associated with a hard launch or a soft launch. But the real point being that you'll have developed a marketing strategy, you'll look to move people through the funnel, but then ultimately it's about getting you to launch, and then you need to make this determination, hard or soft. There's also earned media, and it's really encouraging people to write stories about your product. But this is where one of the earlier things that we referenced around value prop and having that, that short statement that really helps people understand, like it's Uber for grocery. Not only is it important for your consumer and for your team, but it ends up playing out beautifully with press too in helping them understand what it is. The key with press is to know your talking points well in advance of engaging with them, because they will shift the story in a variety of ways. Now, in generating earned media, you can take a very bold approach, kind of like Richard Branson and Stunts. You can be very opportunistic, like what Oreo did with the Super Bowl, or figuring out how to tap into a news, what's happening in like current events or with the news cycle. Or there can be the traditional conservative, just issue a press release and hope that you get the relevant traction. So as I mentioned, connecting your value prop, like what was interesting about what Majuri did is the narrative was around, I don't need to be gifted diamonds, and it's not always for a special occasion. Women can buy diamonds for themselves for everyday use. And so that narrative ended up playing out really well, but it was sort of core to what Majuri stood for. Similar to this, as I was referencing earlier, this company wants you to be able to call a plumber like you'd call an Uber. And so what reporters are often doing is taking those statements and using them for headlines. So the more help that you can offer them in advance, the better the press and the more likely that they'll write about you. Other things to consider when you're engaging with a marketing strategy, particularly for early stage organizations, is listing your product on product sites. So these are sites like BetaList. Y Combinator has a bulletin board. There's a variety of them that really, they're for early adopters of products, and it's a great way of getting interest early on. Product Hunt is another example. You also want to build up your base of 5-star reviews. The reviews end up being a source of validation for people. But this is where one of the earlier points I referenced about the CEOs or any senior leadership engaging directly with the consumer. Once you start establishing that relationship, this is something that you can ask. And so one of the things that we did at Ecobee was any positive service experience that we had with a customer, we'd conclude the call by saying, would you do us a solid? And if you've had a great experience, reflecting that in an online review. It ended up being extraordinarily powerful for us. And then investing in content. Now, content for non-marketers can seem a bit curious, but it really helps you drive up your SEO ranking and serving as mechanisms for inbound. So it's free resources that allow people to solve problems they might have. I'll give you 2 examples of this. One is a painting company called Claire. And the problem that they discovered was that people just have such a hard time when they're staring at a sea of colors in a paint shop. And so they're trying to figure out what's popular and what's the right color for me. And so they launched this quiz, 8 simple questions to get you a personalized recommendation based on your preferences. And it ended up being a great hook because it really minimized the level of research required by consumers. Credit Karma does an extraordinary job of this, whether it's a credit score simulator, so figuring out if you made these changes in your life, whether it be to your credit card payments, the number of credit cards that you have outstanding, your mortgage, how would that impact your credit score? So this is really helpful and ends up driving a lot of amazing search results, because as people are searching for debt calculator, Credit Karma has the first result. Right? So it's thinking about what people are searching for, delivering content in a way that addresses those concerns, but it serves as a lovely on-ramp into your brand. You also want to ask and give them a reason to stay in touch. So asking for their email, ensuring that they have clarity of, if I give you my email, what am I going to get? Am I going to get early access? Is it about, be the first to know about sales? Really helpful. Show them you care with follow-up communication. I think we've talked about that, but it's also thinking about follow-ups post-purchase. So what do you want them to do next? Can you give them an incentive for the next purchase? Considering your offline strategy, one of the things I love about this Jiffy example is that it's ostensibly an endorsement from your neighbors saying, we use Jiffy, you should use Jiffy too. Because if it sucked, I wouldn't put it on my lawn. So there's an implicit endorsement that's there, but thinking about your offline strategy, whether it's paid or completely free, is really quite helpful. Developing a thoughtful strategy to drive trial. So this is an example of a brand called Girlfriend Collective. Now they're an athleisure company that wanted to launch with leggings that cost well over $100. And they were trying to figure out what's the best way to do this. And they had high levels of confidence that if women tried these leggings, they would love them. So instead of investing in marketing, they said, we're just going to give you a free pair. You just pay for shipping from our factory. And so they sent out all these leggings for $20, because that's what people paid, $20 in shipping. And the amount of not only press, but influencer coverage that they received totally outperformed what they normally would have allocated to a marketing budget, but it really drove trial. And once people had this sense that it was working for them, it spread quite effectively. You want to consider the role of influencers, and particularly, Majuri's done this well again. The amount of content that they have on a daily basis is extraordinary, but they've created a tiered program within their influencer realm where people that deliver a lot of sales end up getting access to more and better products than people that don't. So you're likely to have some holdouts as you go through this, as you're working people through the funnel. And so consider what type of incentive structure you provide them and at what stage, because you have to consider the contrast, which is I'm going to continue to spend marketing dollars trying to win them, whether it's through a remarketing campaign or through a net new marketing, versus if I gave them a $10 or $25 incentive, perhaps that brings them into a sale, but I'm no longer spending that money on marketing. So thinking about the offsets becomes really important. Building viral loops from the outset. So this came, the credit goes to the Reforge Growth Series, a really extraordinary program based in SF to really help you hone your digital marketing. But it's quite interesting to contemplate how marketing fits in with product. So really thinking about when someone clicks on, signs up for your product, is there a prompt, and at what point is there a prompt to invite friends? Does the product or service become better when friends are invited? And then what percentage of those people will click on it and sort of feed the loop? So here's an example of how Slack does this. They have the new user sign up, they create a team, they invite team members, but then team members end up creating new teams and inviting other people, and it just ends up being this sweet viral loop, which is a lovely intersection between marketing and product. What we did at Ecobee was drive the flywheel through reviews and referrals. So it was another way of spinning this. But as I was talking about reviews, we ended up through this advocate program through Influitive, another great program that I'm an advocate of. But what we ended up doing was having 2/3 of the 5-star reviews of Nest within a few months of our launch, even though we had 1/50th the market share. So we presented an impression to the world that we were bigger than we actually were, just simply based on 5-star reviews. And then we worked to close the gap between rhetoric and reality. So reviews become a really powerful way of signaling to the world that you are a desirable and substantial brand. I'm going to skip over a couple of these because I have a minute and a half left. Robinhood did a great job with referrals. Acorn also had a fantastic give-get model that's worth looking into. But what I want to spend the last minute on is anticipating VC questions. So as you develop a go-to-market plan, these are likely to be 4 or 5 of the things that you're going to get asked. The first is that, do you have a realistic addressable market? Which is why I spent so much time on the Tam Sam SOM a little bit ago. Because when you've overstated your addressable market, you end up getting into trouble for 2 reasons. One, it's an illustration that you haven't done your homework. But secondly, it just generally erodes credibility because it shows that you don't have a solid understanding. So ensuring that you have a realistic addressable market, and the great way to do that is just to talk to your other startup friends, find an advisor that can do a gut check with you. But ensuring that this is solid becomes pretty important. Secondly, do you have a defined target customer and segment? The VCs tend to understand that growing companies have a limited bandwidth and competition can be intense. So if you show that you have a refined target, it's an illustration of discipline that is then halos over, I think, a good chunk of the other work that you're doing. A third one is, are your success metrics clear? I think VCs want to hear about 3 or 4 metrics that the CEO will use to proactively drive and manage the business. Some examples being your cost of acquisition, the lifetime value, your retention churn metrics. But knowing those from the beginning ends up being another credibility booster. And then lastly, are your sales and marketing models performing? It's easier to invest in organizations that have a functioning model, as I was referencing at the beginning, because then more capital sort of allows you to scale a model that's working instead of figuring out that model from scratch. So those are a couple of the highlights, and I will close with 42 seconds left just to say thank you for listening and staying engaged through this race. I appreciate it. If there's any way that I can be of assistance to you and your organization, let me know. You can email me if you have any questions about the deck, or I'm here for the next 3 days, and I'm doing an office hours at the BDC tent on Thursday. Happy to help. Best of luck to all of you, and thank you for your time.